Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. CMHC released their annual consumer survey this week, where they survey a little over 3,000 respondents and try to take a snapshot of what the mortgage market looks like here in Canada. The surveys of particular interest this year, as we've all seen the real estate market and the housing market skyrocket to record levels. And we've also seen a lot of people shut out of the housing market. Many first-time home buyers who at one point would have been able to buy a house no problem. Here in London, the situation's of particular concern because we've never seen prices like this before. And I think it's worth noting what's actually going on in the market. So what I want to do today is get into the top 5 results that we can look for in the report released by CMHC. There's quite a few insights, but there's 5 of particular note that I want to get into, and just to see what it means for Canada's real estate market going forward. The first result that I want to get into pertains to maximum pricing. So the results found that 65% of respondents purchased at the maximum level that they could afford. So what usually happens is you go to your bank or your mortgage broker and you bring all your documents, and then they spit you out pre-approval based on the maximum amount that you can afford, and then you go shopping. But the data from CMHC shows that at least 65% of the respondents are taking that pre-approval, taking that approval and going and maxing out, finding the property that's worth just close to the maximum amount that they were told they could afford, and that's what they go for. I find this really interesting and of particular note because we can use that data to help purchase in the future. Most cities will release their average annual income or their average annual household income, and they'll also release the average purchase price. So you can kind of see where you fall on that line between what you can afford and what the average purchase price is. So if you know that 65% of your competitors out there when you're trying to buy a house are going to buy the maximum that they can afford, then it kind of gives you an idea of where you should be if you're really motivated to get into a house. So if the maximum affordability in your region is $540,000 based off the average income, that's what it is in London, Ontario, and your income is right at that average, then you know if you try to purchase that $540K mark, you're going to have a lot more competition than if, say, you went in for something around the $450K mark, which will have a lot less competition than the rest of the buyers trying to max out on their home purchase. So I found that statistic to be really, really interesting and definitely really helpful for first-time home buyers going forward. Second, and this one is really interesting, especially as COVID hopefully draws to an end. We've all kind of figured that the housing market went so high throughout 2020 and now throughout 2021, due in large part to COVID, as people changed their buying habits, as people wanted to have more space. Conventional wisdom has been that COVID was a big motivating factor in people trying to buy new houses or trying to move to something bigger. But this report shows that 84% of respondents say that COVID actually didn't have any effect on their decision to buy or their decision to move. That really flies in the face of the conventional wisdom on the part of lawyers, realtors, mortgage brokers. Even the Bank of Canada just last week released a report saying that they expected a lot of the demand to slow now that the buying patterns would go back to the way that they used to be, and to more normalized buying patterns. So this report kind of shows that the market is fluid, and that maybe COVID didn't have a big as an effect on the market as we thought it did. And of course, we'll have to wait and see how that bears out. But it's definitely an interesting statistic that, 84% saying that COVID had no effect on their buying patterns. That's an awful lot, considering most people, including the Bank of Canada, thought that it did. Whether or not the survey respondents were being 100% truthful in their reasons for buying is yet to be seen. But still, that's definitely an alarming statistic. Third, and this will also have an effect on your future buying decisions. 40% of CMHC's respondents all use mortgage insurance. Now, that's not insurance like life insurance or disability insurance. That's the insurance that you have to get if you put down less than 20%. So, when you're looking at the potential market and you're looking at what you want to buy and what your price range is, it's a great idea to know what your competition is. And what this report tells us is that 4 out of 10 people are putting less than 20% down. So that's going to constrict how much they can afford going into the future, because CMHC and the rest of the mortgage insurers' regulations are very, very strict. A lot of options don't really open up until you get to that 20% mark. So when you're looking at your potential competition, 60% of your competition out there is armed with the 20% down payment. And then 40% of them are really constricted in how much they can do vis-a-vis offers and how much they can offer, and how much options they do have as for financing when they're out there putting offers to purchase in. So I mean that's a good thing to keep in mind, that about 4 out of 10 people out there shopping are having to use mortgage insurance, so they're not using a large down payment. Fourth, and I think that this one really shows more about the government and CMHC itself than it does about the market, but it kind of gives you an idea of where the government is heading in the future. One of the biggest headlines coming out of this report was that 52% of respondents who qualified were using the first-time homebuyer incentive. We've talked about this in other videos. That's the shared equity program. So that's where you put 5% down, and the government will put down another 5% to help with your mortgage affordability. But the government then also owns 5% of your house. So when you go to sell your house in 5-10 years from now, if you sold your house for, say, $500,000, the government gets 5% of that $500,000, even if you only paid $300,000 for it. So it's a shared equity. The government does take a piece of your house. At first look, when looking at this survey, 52% seemed awfully high to me, because I've had hardly anybody show much interest in the program. And once they find out that the government will be owning 5% of your house, I have yet to have someone want to take advantage of the program. So I wanted to just look into the methodology a little bit and how they came to this statistic, and it's really interesting once you take a look at it. So when you look at the 3,500 respondents, only 9% of respondents were actually first-time homebuyers, which need to be part of this program. So when we do the math, if only 9% were first-time homebuyers, that's only 226 respondents were actually first-time homebuyers. Then it says 52% of those who qualified used the program. Well, we don't know how many of those 226 qualified. We can assume it wasn't 100%, but let's just, for argument's sake, say that was 100%. If 100% of those 226 did know about the program, and only 52% used it, then only 117 participated in the program. And then one of the biggest headlines the CMHC can come out with are that 72% were aware of the first-time homebuyer program. So I mean, the statistics, once you break it down, say to me is that even if people are aware, they don't use it. So it doesn't seem to be that great a program to me, or for the buyers that I've talked to. Just evidenced by the fact that nobody has really used it, because people don't want the government to own part of their home. But even more interesting, I think, is that this did make the front page of the headlines and in the key findings of the report. I would think that they would more have pushed how few people are using this program, rather than how many people were aware of it, because this does seem to read as though if more people knew about it, they would use it. When I don't think that's the case, and the data certainly doesn't seem to bear that out. They have data for every other minute detail, and I do encourage you to look at the report. I'll leave the link in my description. They have the breakdown for all of the different data computations that they have on there. but they really could have had more people ask. They could have really done more research and found out why people aren't using the program, and they chose not to. I find that very interesting because CMHC is the government-backed insurer, and they've lost a lot of market share in the past 18 months, and we've gone over that on videos on this channel as well. And also in the press conference yesterday, Prime Minister Trudeau mentioned a lot this shared equity program that they really seem to be pushing, as that's what the government is doing to intervene in the market and help with mortgage affordability. So the government seems to really be pushing this. The insurer seems to be really pushing this, but as far as we can tell, nobody really wants it, or not a whole lot of people really want it, and I mean for obvious reasons. So I found this statistic and the method used to obtain it, as well as how much they're pushing it, to be very interesting and definitely telling as to what the government plans on doing vis-a-vis the housing market going forward, or more so what they plan on not doing, because it does seem like this is really what they're relying on as a means to say that they're doing something. And finally, blind bidding. 66% of respondents seem to indicate that they want an end to the blind bidding system in real estate. So that's where you put in an offer and you don't know what all the other offers are. And a lot of people have attributed the blind bidding process to be a key culprit in driving up the prices of real estate in Canada, as it's led to multiple bidding wars. And I think we've seen that quite a bit here in London, Ontario as well, where bidding wars, to a large extent, have become the norm. So that's definitely an interesting statistic going forward, as it seems that more and more people there's gaining support for ending this blind bidding system. So all in all, we see more and more people, 65%, maxing out on how much they can buy. We saw that COVID didn't really have as big an effect on the home purchasing decisions of buyers as we always thought that it did. That was really, really interesting for me. 40% of people are using mortgage insurance. They're putting less down than they thought. They're putting less down than 20%. Less than 20% down. There we go. CMHC and the government continue to be focused on the shared equity plan, which I think is what we should really try to call it more and more, rather than the first-time home buyer incentive. Because I think when people know that is a shared equity, sharing ownership with the government, they do tend to get turned off from that right away. And also people want an end to the blind bidding process, at least 66%, a majority of respondents. So I think this was this whole report provided us a great insight into what's going on in the Canadian real estate market. And we'll have more reports as they come out, and more data as it comes out on the mortgage and real estate market here in Canada. Please do click like and subscribe, and you'll get those updates as they're released. Thank you.